Okay. Right, there's possibly a couple more people that might drop in, but we'll make a start. Obviously, because I'm conscious of people's time, and I'm hungry as well, and I want my lunch after this. So, so if I can please just welcome to the call today Tom and Adrian from Mattioli Woods. So they will obviously tell you a little bit more about who they are and what they do. But we've partnered with Mattioli Woods for a couple of years now on our employee wellbeing plan that we offer to our clients. And they also do lots of other things around employee benefits and various other bits and pieces. So we thought it'd be really nice for them to come and talk to you today, give you a little bit of an education piece about what you can think about when it comes to employee benefits, what's topical, that kind of thing. And obviously, if you've got any questions or if you do want to explore any of the options that are talked about, then Tom and Adrian's contact details will be available for you as well. I will be in the background listening to the call if you do have any HR related questions that tie into the benefits. But I'm sure these guys are the experts. So I am going to hand over to you. Who's starting?
Yeah, I'll go. I'll start this off. Normally Adrian does this, so it's just a bit of raw reversal today. Good to see everyone. Happy to be here for Lunch and Learn. And as it's lunchtime, feel free to have a sandwich or whatever you're doing. Don't not eat on account of me and Adrian. So yeah, there wasn't a specific brief today. So we're here to talk about all things employee benefits, and we hope that some of the information that's in this presentation today will be useful for you. I've got to say, because our lawyers like this, and Adrian's made sure I say it, is that any tax information in this presentation is for this tax year, so the 25-26 tax year, and we're not here to give any sort of financial advice today. It's all information-based stuff. So that's what the lawyers want me to say. And then, yeah, just quick introduction. So I'm Tom Martin. So I'm a senior employee benefits consultant at Mattioli Woods. So my role is everything from workplace pensions through insurance-based benefits, well-being, and also online benefits technology. Adrian, do you want to give yourself a quick intro?
Yes, great to see you all. Nice to be with you. My name's Adrian Firth. I work with Tom and a number of other consultants at Mattioli Woods, but my piece at Mattioli Woods is to help to educate people around financial related matters, and that's the bit that I'll be talking about a little bit later on. So for now, I'll keep my powder dry and pass back to Tom.
Like the employee benefits Anton deck. So I'm just going to go on to the next slide if I can. So yeah, like I said, there was no sort of exact brief, so we figured we'll talk around a few different subjects. So we're going to talk about sort of some trends of the moment in employee benefits, so what we're hearing about from our clients. A little bit about flexible benefits and personalization of benefits with diverse workforce nowadays. We're seeing benefit strategies becoming more personalized to meet the needs of different groups of people. So we'll talk about that. Also, technology is everywhere, so ultimately that feeds into employee benefits as well. So a little bit of information around that and what's trending there. Then Adrian's going to talk about the importance of financial well-being on employees. And then I'll sort of cap it off really with some regulatory updates, things that are happening and coming down the track that maybe you should be aware of if you're not already. So yeah, a few things to discuss. So first of all, just a little bit about Mattioli Woods for those who've maybe heard of us before or not heard of us at all. So we are a wealth management and employee benefits company. So the business was established over 30 years ago as a wealth management business, so looking after high net worth individuals. But through various changes to the business, acquisitions, and the employee benefits team was formed along the journey. And over 15 years, we've become a very well-respected employee benefits consultancy team across the UK. You can see some stats on there. We're looking after, I think that number is slightly out of date. I would suspect it's more like 700, 750 clients now. Look after a lot of premiums, the insurance premiums. We do a lot of work for our clients in terms of insurance benefits. Got a team of over 60 people, and we're also we work in the multinational space as well. So businesses where they might have companies overseas as well. We're specialists in that field as well as domestic. Myself and Adrian are based up north, so we do have locations over the country, but where me and Adrian are based out of our Manchester office. It's why we've built a relationship with Cube HR because of our sort of Lancashire northwest roots. But we do have employees across the UK and into Northern Ireland as well. So hopefully that gives you a bit of a flavour about what Mattioli Woods do. So in terms of trends in the benefits market at the moment, so I'm sort of going from top to bottom in terms of what we're seeing, and in terms of our most inquired about sort of benefits at the moment is certainly healthcare benefits. So, and it's not sort of hidden, but in the news at the moment, as much as we love our National Health Service, for non-emergency treatment, waiting lists are long. There's about 7.6 million people waiting for treatment on NHS at recent figures. And, people are waiting potentially up to a year or more for treatment as well. So, as much as the NHS are trying to bring that backlog down, again, well documented, it's taken a while. So what we have seen over the last, I would say, 2 to 3 years is a lot of employees and a lot of businesses moving towards the private sector for healthcare. From a business perspective, the main reason that they're looking to do that is to try and get their people back to work quicker. If someone needs treatment for a bad back or musculoskeletal issue, which is stopping them getting into the workplace, then they want that person treated and back to work as quickly as possible, and the private sector will look to do that. So we are seeing a lot more inquiries of businesses that maybe wouldn't have historically looked at private they're now moving into that space because they want to look after their people and they want their people to be working. I think the high demand of both care and also claims on the private healthcare system is making that benefit more expensive as well. So the more claims that we're seeing put through the system, it's bringing premiums up, and it's making the product more expensive for people. However, with the ability to broker it and have relationships with providers, we are seeing we're able to control costs and still make it a viable benefit for a lot of businesses. And there are also, that's looking at more like sort of the full sort of private medical insurance, which people will be sort of privy to, as in, you will have a referred issue from a GP, and then that you can take that referral to a private medical provider such as a Bupa or an AXA Health, and the treatment will be paid for via the insurer. There are other areas of healthcare benefits that we're seeing as well. Dental insurance is becoming a highly sought after employee benefit as well. Similar reasons to why private medical insurance is needed is because actually, NHS dentists are scarce nowadays, again, due to demand. So more and more people are being pushed towards semi-private or private dental. So therefore, it's quite expensive. So in order to be able to take dental bills off someone's plate, and it sort of links into the financial wellness element, is that, if a business provides that level of insurance, the employee could claim back the cost of their dentistry against the dental plan, and therefore it's costing them less, which means they've got money to spend on other areas of life as well. So things like dental are becoming increasingly popular. And then also more budget areas as well. Some of you may be aware of things like health cash plans, where a health cash plan effectively has like a claim back, so like a cashback service against varying levels of treatment, routine daily treatment. So things like, again, a bit of dental in there, but things like optical. So if you're going for an eye test like myself, and you need glasses, then a cash plan would support the costs of things like that. But it can also be towards the cost of self-referred physiotherapy, chiropractor, chiropody, prescriptions, things like that. So employees, for a relatively low cost, could claim back the cost of some of their routine healthcare needs, which is, a bill off their table at the end of the day. So there's a lot of benefits there in the healthcare space. Otherwise, from taking up actual insurance products, you may be aware of other services that you have within the business that might provide like the access to a virtual GP service, access to employee assistance programs. We normally find those on likes of life assurance or income protection schemes, but there's plenty of other services that offer those sort of benefits. They typically come free with insurance policies. So, if you have got those, then do promote them, because I think they're very valuable to an employee. So if you do have those free sort of services, then do let your employees know they're there, because they also become an important part of a healthcare benefit strategy. So sort of alluded to it in the last slide, but sort of absenteeism, is becoming a real issue as well, around similarly to what I was saying about the private medical, and the two biggest areas we're seeing absenteeism for the long term is around cancer and mental health issues. And from working with some of our sort of insurance partners, we're finding that from employees that go off on long-term sickness, one of the biggest issues across all generations of employees is stress. So we know how much a mental health well-being policy is to your employees. So whether you're offering things like mental health first aid, like basic employee assistance programs, anything that would allow your employees to get to see a counsellor or speak to someone who could potentially help them outside of the family. So someone who's sort of impartial is a great service to offer. We're seeing the need for employee assistance programs growing all the time. But as well as that, once people are off with mental health issues, they are seen to be some of the longest term absentees as well. So people are off and out of work for the longest amount of time. A lot of businesses will have some sort of sick pay policy, whether that's just relying on statutory sick pay, or whether that's offering some degree of paid or partially paid time off during the year. Businesses try to look after employees that way. However, if employees are off for the longer term, it's not always financially viable for a business to carry on paying that employee for the long term. But what we do find, and again, another insurance product that is becoming more and more popular, is the group income protection. So where someone's pay can be insured for a certain length of time, whether that's for a short few year period or whether that's for the long term, that salary or a percentage of that salary can be insured to take away sort of the long-term financial uncertainty of trying to pay that employee. So when we talk about cancer cases, mental health cases, or even if it's other reasons that people can't work, having an insurance policy that's potentially going to pay that person is, one, a financial peace of mind to the employee, but two, helps you as a business sort of balance that financially. But also, again, talking about some of the sort of free services that come with products like this is rehabilitation services. So not only are you paying for for an insurance premium to pay the employee a salary or part of a salary for a period of time, you're also within that premium getting occupational health. You're also getting rehabilitation services to try and help get that employee back to work as soon as possible. So as a business, you're also supporting that employee and trying to reduce the absenteeism in that particular case. So again, there's lots of services around helping your absentee rates and keeping people in work and being productive for as long as possible. Now, just moving on to the second part of the agenda, which is the personalization of benefits. So this is something I actually talked about recently on a webinar. One of the key things we're seeing now in all workforces is this multi-generational workforce. So we're now seeing the best part of 4 generations working. So that's your sort of your boomer generation, Generation X, millennials, and now Gen Z as well. They're all very generic terms, but they cover the majority of the workforce, with millennials actually now being the most or the biggest population, and Gen Z being certainly the fastest growing part of your workforce as well. So young people coming in from college and university. And all these different generations of people will want different things from the benefits. You've got the older end who are looking at retirement benefits. They're looking at potentially health, more health conscious as well, because as they get older, they realize health is a problem. You've then got your sort of your middle rangers, Generation X and millennials, who financial protection and looking after family are going to be important. So you like sort of flexible working or hybrid working, protecting life assurance, so that if anything happened to them, that mortgage payments could be made. And then also being flexible, so that for childcare or even elder care as well is becoming a huge part of people's lives now as well. You might have people looking after the kids, but also looking after the parents. It's there's some real stress and strains of the work-life balance. So you've got these multi-generational workforces, and then you just missing out Gen Z there, but actually, they're coming in with no, stereotypically really tech savvy, again, wanting information immediately through so they've got a whole range of things that they want that is completely different to the older end of the workforce. So it's about, there's no problem with having a range of core benefits that you must have your mandatory workplace pension because that's the law, but otherwise, previously death in service and maybe some healthcare would have been enough. But now, you've got to please all these different people, and that's not looking into other areas of diversity as well, such as gender, race. There's all sorts of things that people will want different to each other. So we're in this real sort of boiling pot now of everyone wants something slightly different. Now, the way that sort of employee benefits provides and businesses also are trying to sort of bridge that is offering voluntary benefits. So actually, instead of saying, look, these are our benefits and this is what we're offering, it's more, can we now offer choice to employees? And the first thing that comes to mind is actually, well, if we offer a load of choice, that's going to cost businesses more money. So that's something to consider. But what we're finding now is a lot of businesses will offer voluntary benefits, and even big companies may already do that, but even with smaller businesses nowadays could still offer a range of voluntary benefits at quite a low cost. And that's because you either offer the employee a small allowance towards flexible benefits or voluntary benefits that are available, or you allow your employees to purchase the voluntary benefits via payroll. So it limits the cost to the business while being able to offer a range of benefits. And if that employee sees it as valuable, they are going to put their money towards it. So offering flexibility around your benefits is something that's really going to help that diverse workforce. And there's probably a few areas. It's one, being able to offer those benefits in the first place. So how do you go about doing that? And secondly, then how do you make sure that your communications are good enough to meet those needs, to be able to tell the employees those benefits are there, so they can go and research them, and if they do want them, spend potentially some of their salary on those benefits. But it's certainly the way that the trends are moving, is towards offering more voluntary benefits. And I think the best way in being able to do that is to get rid of the old school benefits brochure, if it's a PDF document, or if it's a coffee stained document in the staff room, whatever it might be. I think the world is stepping away from any sort of paper nowadays. So it's about maybe potentially moving things online. And again, there's going to be different levels of budget for this sort of thing. So online always seems quite a scary thing, and always thinks, oh, that's going to eat your budget. But actually, there's several ways in which you could do this at varying levels of cost to a business. But ultimately, if you can move things online, it supports that effective communication, so you can get the right information out to the right people by segmenting your workforce and who would want what benefits. And it also allows for your generationals as well, like to get your Gen Z directly into a portal, so they can look at benefits, and also for for older generations as well. If they're looking for retirement benefits, they know where to go to get that information. So there's plenty of upside to having your benefits online if you're wanting to offer that choice to your employees. Ultimately, because it makes the whole process for an employer a lot smoother in terms of administrating benefits. So if you've got all your benefits in an online system, the systems can generally, help you to administer those benefits from a day-to-day perspective, but also making the sort of administration from a payment side a lot easier as well, like sort of streamlining what you're doing around the benefits if everything's in one place. The key stat from Aon, about 50% of employers using an online benefits platform. It came from a survey, so I would suggest that that's taken with a pinch of salt, but I think it just helped to sort of add some context to how this is actually flowing, and that a lot more businesses are now looking at online as a way to promote the benefits package. And ultimately, if it helps employees to understand the value as well, like every employee hopefully knows what their salary is and they see that on a pay slip every month or every week. But necessarily what they don't understand is the value of the rest of what you're offering your employees, whether it is, a small offering or whether it's a large offering. And they would want to know that is there. And some of the things that you offer aren't always visible. For example, the life assurance or death in service policy is not always visible to an employee because it only really kicks in if something bad happens. But for the employee to know that is something that's offered to them is always going to be a very very important thing, and just maintains that sort of value that they see themselves having in the business as well. And sort of just to show, what I mean by there is choice out there. From example, from Mattioli Woods, we offer 2 different levels of this, and as much as I'm not making this a sales pitch at all, it's just really just to help you understand like what is out there. So the 2 services we offer, one is called MWorks. So it's a very sort of low cost offering, which effectively turns into an online benefits brochure. So, we can take what you've got as from whatever you have right now, which could be nothing, could be like I say, a PDF document, and just make it an interactive website. So effectively employees can click on the benefits that they have. They can see, links off to various provider websites or portals that they might need to use. Just makes it really nice and simple for employees to see their benefits. The other thing it does, which is like sort of the unique part of this, is we can bolt into it a lot of voluntary benefits, such as like cycle to work schemes, like home tech schemes, so where people can buy, the likes of laptops, iPads, phones, wearables via the platform. The employer would pay for those up front, so there is an upfront cost, but then the employees could pay back for those products via payroll each month on like a salary exchange basis. So it's a tax efficient way of the employee purchasing the products, the tax efficiencies for the employer. And actually, because it all comes through one platform, if you've got several employees picking different voluntary benefits, it all comes through to you as one invoice and one payment file, like one sort of payroll file. So that's sort of where I'm talking about. These platforms can, offer a large amount of voluntary benefits, but make it a really streamlined process for your payroll team, your administrators that you have at your business. So that's like one offering, and the other offering is, a more sort of complex, flexible benefits platform, which would typically be for, around 50 employees or more, typically, where you are actually offering a huge amount of choice with your benefits. So, if you have a life assurance policy, a death in service, you might allow employees to be more flexible around and increase or decrease their cover, whilst offering a range of flexible benefits as well. So it's just it's a much more costly, but more offers employees a lot more choice in terms of what they can do and how the system works. So you can go from anything from a few £1,000s a year to run something up to tens of £1,000s to run something, and anywhere in between. So the costs are certainly broad enough that online should now be achievable for most businesses in the UK where it's needed. But I'm going to pass on to Adrian now to do some financial education stuff.
Oh, me. Thank you.
Yes.
And pleasure to meet you all. And thanks for inviting me onto the session. And I think Tom's inadvertently mentioned a few of the things that I thought might be interesting to have a look at on the way through. But nevertheless, bear with me, and I might repeat some of the things that he's already said. But obviously, Tom has control of the slides, so during the presentation, I will be doing my world famous impression of Professor Chris Whitty by asking him to move the slides on, please. But just before you do move on to the next slide, Tom, obviously talking about money and talking about finances does link fairly closely with the world of employee benefits, because when employee benefits are put in place, they are financial products in nature. And the added complication is that if you buy an employee benefit, what the insurance providers or the benefits providers are trying to do are differentiate themselves away from other providers in the same market space. So as a result of that, over the last couple of years, we've seen an explosion of what we call additional add-on benefits that have been added to the benefits. So the problem for me is whenever we speak to a bunch of employees and we say, you've got this employee benefit, what they actually need to know are what the benefits are within that main benefit that they've been given. And that's where I think I tend to come in, which is a little bit on the financial education side and a little bit on the employee benefits side. And my job at Mattioli Woods is pretty much as a mouthpiece. So I get asked to talk about lots and lots of different things. The joy is that I'm a dim northerner, so I ask all the stupid questions around the products and the services in order that I can actually speak to people in nice, simple, plain English and explain to people how things work. But with money and finances, obviously, it's very, very topical at the moment, because if we look back in recent times at what we've had lockdowns, and then we've had cost of living increases, we've got inflationary pressures, we've got the war in Eastern Europe, which has a knock-on effect on our money and our finances. And so probably won't come as much of a surprise to you all that we're doing more of this now than we ever have done in the past. Tom, if you could move on one for me, that'd be great. And again, Tom's already touched on a lot of this in his presentation, because when we're looking at a group of employees and we're thinking about spending money on them, what we want to get is maximum return for the amount of money that we're spending. And so it comes into an overall piece of well-being. So again, I can relate back to what Tom's already spoken about with things like healthcare, which are trying to help people with their physical well-being and their mental well-being. I think financial well-being fits in very well with it. Just if you sit back and relax and think, if your finances are running out of control, or you were struggling with the cost of living or struggling with debts and borrowing and things like that, you'd probably spend most of the evening staring at the ceiling, writing lists of things that you might need to go through and stuff you need to do. And that financial pressure that you might be feeling may well have a knock-on effect on other areas. I mean, if you are struggling with money and finances, you're probably not going to be motivated to put your running kit on and go out for a nice long run one evening. You're probably actually just going to be sitting back worrying about the things that you need to sort out. And I think financial well-being slots in very well in complementing the other areas. I think you could also add social well-being into the mix as well, because we have lots and lots of research behind the scenes that shows that if people are socially giving back, it does give them a well-being boost. And lots of companies do that as well. They organize employees to have time away to help out social enterprises or third sector organizations with various different projects, etc. Bringing it back to employee benefits, I think communication is key, because if we're putting in financial products and financial services for people to take advantage of or make them feel better about themselves or use something to improve their health, they just often need a little bit of hand holding to help them with how that product works and how it could make a a big difference to their own circumstances. Next slide, please, Tom. But what we've done in the world of employee benefits is we've just made it incredibly difficult for people to understand what the heck is going on. I genuinely, I wanted to share with you that 3 or 4 weeks ago now, I attended a meeting. It was online, and it was a technical meeting about technical products. And I understand the hello, how are you doing at the beginning, and I understood the hey, we should do this again sometime soon at the end. And I understood very little of the conversation that went on in between the start and the end of that 1 hour meeting, because we've made it so complicated. We've created a world of acronyms and jargon. And what we try to do is to help people cut through all of that. So I hope you can see by the way I'm just talking to you that it's not trying to be technical in nature. And when we're communicating with people, you've got this product, this is what it does. So if you need to use it for this, that, and the other, then this is how you go about using it. And oh, by the way, within that product are these other little things that you might want to bear in mind that you can use. Now, something that Tom was talking about earlier was private medical insurance and health cash plans, life insurance policies, all those kinds of things, which are all the acronyms and jargon that you can see here. But with many of those products, to just give you a quick example, lots of them have things like online or 24/7 GP services attached to them. So an employee needs to know that if they're ringing their GP and they get to the usual gatekeeper on their reception and they explain why they want to see a GP, and the lady goes, or the gentleman goes, well, hey, that's not urgent, so you can see them 3 weeks on Thursday. Well, actually, with a lot of the employee benefits, there's a GP service built in. They can be seen anytime they want. Day, night, evening. They can arrange a private prescription and get it delivered to their place of work or where they live at home. And so employees need to know that there's a lot of these extra little services that are added on to the main benefits that they have. And of course, in the background, we unfortunately still don't teach financial education in schools and colleges and universities. So when your employees are coming into your workplace, they won't have had much of an induction into managing money and finances. And then we throw all these terms at them and acronyms, and they probably fail to get the gist of what they're all about. They'll probably go back to something like TikTok to find out what those means, or be influenced by those kinds of people. Next slide, please, Tom. I again, like Tom, I'm not trying to use this as a sales exercise, but in my experience of dealing with the hundreds of clients that we've got and talking to their employees, before we open our mouths, we need to have some kind of a plan as to what we're going to say them, and what to say to them, and what we're going to cover with them. And there are 2 ways of dealing with it, and this slide is split in half. Now, neither way is right and neither way is wrong, but if I could perhaps extol the virtues of designing something one way or the other. First of all, we can either appreciate that our employees are very different based on their ages, their experiences, and life lessons that they've learned. So we can design financial education and guidance and assistance that's based around their position in life. Obviously, early career people, we know, haven't had that education and guidance on the way through their schools and colleges and university courses. So they are coming into the workplace a little bit green as far as managing money. And then they have a job, we throw loads of money at them and expect them to be able to manage it. And the first place they're going to go to is TikTok or YouTube and be told how to manage money and finances. And again, so education can be very much tailored to that early career group. If we switch right through to the other end of the employees that we've got in the workplace, those in their latter stages of their career, they're not interested in learning about budgeting and starting the savings journey because they've already hopefully been through some of that in their life. But they are very interested in creating income in their retirements. And we've got a whole host of changes to pensions, and people are working longer. I always find it hilarious that I remember a time where in the office, We'd have parties on a Friday afternoon for staff who were leaving, and we'd present them with a carriage clock or a wristwatch, and they'd have nothing to do on Monday. And of course, we don't have default retirement ages anymore. And with that comes the complexity of understanding what choices people do have. And it's not just around pensions. It might revolve around having loads of money in ISAs, or it might revolve around having investments that we can claw back to live on in our retirement. So there's lots of different areas of finance to cover in those. And again, Tom's already mentioned this, but we do have a kind of middle-aged group of people in the workplace who've got an awful lot of pressure on them, because they will have a generation above them that need looking after, and they may well have a generation below them that need looking after, and both of those are time-consuming and expensive. So, again, there's very different messaging around that time of a person's career as well. Switched against that is having regular interventions. So not necessarily worrying about someone's age, worrying more about educating them. And on the right, we've got loads of lists of topics and subjects. Again, I'm not saying that we sell these, but our clients make use of them. But, understanding around new ways of paying for benefits, like salary exchange, green initiatives like green car schemes that make use of salary exchange, drawing a line between understanding Scottish tax versus English tax. There are all sorts of topics and subjects that are actually really interesting to get involved with and educate people. So again, I'm not going to go into massive details, and I don't want to take up too much time. I think the main thing to bear in mind is that when we're talking and communicating, that we keep it simple. Next slide, please, Tom. Because one thing that you should keep in the back of your mind whenever approaching a group of people is to think no selling. So it's not based on product. You're not trying to get somebody to buy something, otherwise they'll be disaffected and not bother listening to you. No jargon, as we've already looked at in the previous slide, because if we have, and a lot of product information is riddled with 3-word acronyms and jargon. So no selling, no jargon, just the educational facts around what people need to know. Little bit of a shameless plug again, but we try to give people accurate education and guidance on what they have and how best to use what they have and what they put in place, with the eventual aim that we reduce the stress on them and their personal finances, lacing into our messaging, obvious things that appear in the press: costs of living, interest rates, the way our economy is moving, the way that the pensions industry itself is changing the way in which they invest employees' money in things like default investments that they use. So it is important to cover these things and give them the education and the guidance that they need, but not financial advice, because we're not here to try and sell financial advice. By the way, the last important bullet point there on the list: if any of you do fancy a change of business and want to become regulated financial advisors, it's a really easy job, because all you've got to do is create a short-term financial plan, a medium-term financial plan, and a long-term financial plan for your clients. I do admit that the exams are very onerous, and Tom and I hate sitting exams and keeping our CPD points up to date every year so that we're always remaining on the right side of things. But there are ways in which we can help people to build short-term, medium-term, and long-term financial plans without giving them regulated financial advice. Regulated advice is the last stop in the process. Prior to that, it is education and it is guidance on a range of topics and subjects that keep them moving in the right direction with their financial well-being. So I hope I haven't taken up too much of the presentation, Tom. I've gone through a lot of 10 minutes that I had in the middle. I hope it's interesting to learn about money and finance and things like that. And hope I might have the chance to answer any questions at the end. But for now, I'll hand back to Tom. I don't know where he is on our list of Teams people, but back to you, Tom.
Yeah. No, thank you, Adrian. Oh, hang on. I've lost control. Okay.
It's back again.
Yeah, here I am. Right. So yeah, thank you, Adrian, for that really really useful information. So yeah, just moving on to a few final points, which is more around sort of regulatory developments and things that you should potentially be on your radar for this coming tax year and what's coming down the track following that as well. We've got developments as far as 2027, so there's good amount of stuff to look forward to. First of all, how can we mitigate the rise of employer costs? So in the last budget that we had by the government, the national insurance for employers, so the Class 1 national insurance, rose from 13.8% up to 15%. So that's a for employers that employ a substantial amount of people, that is a significant rise in cost. So how can we potentially mitigate that cost? Adrian's briefly touched on it, and this is like the Ant and Dec effect, isn't it? We talk about the same stuff, but salary exchange or salary sacrifice is a real, tangible way of helping you as a business save some national insurance while also passing some of those savings on to your employees as well. The biggest way we can do this is via the pension scheme. Every business who employs an individual has to have a workplace pension scheme. So therefore, there is an opportunity to run a salary exchange method of deductions. For those who don't or haven't come across salary exchange before, so the way pensions work is that everyone who makes an employee pension contribution will get tax relief on that pension contribution. So as a stock method, if the employee has a 5% deduction from their salary, that goes off to the pension provider, and they would get a 20% basic rate tax relief on that pension contribution, which would uplift the amount of money. So say they paid in £100 net, they would get £120 in pension contribution because of the 20% uplift. The salary exchange method sort of just flips the taxation method on its head. So instead of having a net pension deduction and then receiving a tax later, the employee has a gross deduction. So effectively, the employer reduces the employee's monthly salary by, in this example, 5%. So they're effectively taking a salary reduction, and that 5% is paid into the pension by the employer on their behalf. So the employee isn't paying tax on the 5%, so they're saving tax immediately at their marginal rate of tax, which could even be 20, 40, or 45, mostly 20 or 40. And then they would also save national insurance. So it means that the take-home cost to that employee is less. So they've effectively got more take-home money than they would have done. So there's tax savings for the employee, but because that pension contribution is being paid to the pension by the employer, you're also saving your employer national insurance on that. So it can ramp up. Now, the example on screen here is based on 100 employees with an average salary of 30, just to sort of make the numbers easy. But as you can see, if you have 100 employees with an average salary of £30,000 and they're all making a 5% contribution, which is, for most cases, what employees would pay, the annual pension contribution is, salary exchange total will be 150,000, and out of that, the 15% employer national insurance saving would mean a £22,500 saving to the business in terms of national insurance. So, you could potentially apply that to your own workforce if you don't do salary exchange at the moment, and have a rough idea of how much tax or national insurance that your business could save. And in a time where costs are going up everywhere, it's no better time to have a look at salary exchange. So if that's something your business doesn't do, I would potentially suggest having a look into doing it, because it's a really helpful technique for both you and your employees saving some money. I'm happy to answer any questions on salary exchange, because it is a fairly, it's one of the more complex things I'll talk about on the call today. So one of the other legislative pieces that's coming down the road is the mandatory payrolling of taxable benefits, which is a bit of a mouthful. In terms of what we mean by this, so in 2024, the Chancellor confirmed that any benefit which effectively carries what we call a benefit in kind has previously been, paid, well, the tax has previously been paid by employees on an annual basis. So, when you're producing your P11D statements at the end of each year, it means the employee knows, if they've had any taxable benefits and what the tax was on those benefits, and therefore they know, for a year in advance how much tax they're going to be paying for those benefits. So it's always, in most cases, been an annual process of a business getting to the end of the tax year, having a few months to work out what the tax was for each employee, if there's any taxable benefits, things like company cars, healthcare, insurance, anything where the employer is effectively providing a free or cut cost benefit to their employees would be classed as a benefit in kind. So that's always been a manual process, and the employees would expect to get a P11D form around June or July of each tax year. So this has been kicked down the road a few times, but as the plan stands, so from April 2027, so the government are planning to make that process a mandatory monthly payrolling instead of the annual P11D. Now, what is driving that change is a couple of things. So one, the HMRC is saying they're looking to modernize the taxation. So instead of having sort of hefty amount of paperwork and a once a year administrative tax, or administrative tax for that piece of tax legislation, they are trying to eliminate, extra work. So therefore they're saying doing it on a monthly basis and actually taking a tax deduction. So alongside income tax, national insurance, they'd also have the benefit in kind tax as a monthly deduction. But one of the main reasons they're doing it is to try and get the tax into the government sooner as well. So instead of having that 1 year delay on benefit in kind tax payments, the government are ensuring that they're getting a monthly influx of taxation. So they're collecting that tax a lot sooner than they would. So does a government need to collect tax, but also trying to make it cleaner for employers to provide more accurate information about the tax that their employees should be paying for those benefits. Now, the issues that we're going to see are around, again, any benefit that attracts a benefit in kind that would go on the P11D form. So I've sort of reeled a few off already, but company cars, healthcare, critical illness policies, etc., would be classed as a benefit in kind. So what effectively the government is saying is they want businesses to collect that information monthly and be able to have their payroll team put it through as a tax. And I think that's the reason why this particular piece of legislation keeps getting pushed down the road a little bit, is because actually, it's going to be really difficult for employers to get that information in real time. They're used to getting it once a year. The insurance companies or whoever is providing the benefit, which would be classed as a benefit in kind, are used to providing that information to employers once a year. So therefore, to try and then provide real-time information on a monthly basis is quite a change of pace for the providers and for the employers involved. So it's become quite a tricky piece. So although we know that payroll administrators are gearing up for this change, it's still not clear on how exactly it's going to work and whether all businesses are going to be able to fulfill their requirements. So although it's been sort of earmarked for April 2027, I think there's still some debate whether it will happen then, but it is definitely going to be something that will happen eventually. So what employers can be doing to help themselves really to gear up for that is just to understand the benefits that they or the employee benefits they offer that do attract a benefit in kind. So understanding each benefit and what that is, and making a list of what they are, and then also speaking to your providers of those benefits to make sure that they are able, or they are planning to be able to provide the information that you will need as an employer in a timely manner. i.e., in pretty much in real time and as a monthly amount, so that you can tax your employees. Now, if you do need support, again, I've touched on our on employee benefits platforms on a previous slide, but this is one way that you can make sure that you do get that information in real time. So the MyWay platform that I've touched on, which is the more expensive option of the two, but that would be able to provide you with that information on a monthly basis. So businesses that do have employee benefit online platforms maybe have the edge over the ones that don't, because they're able to get that information already. But what I would say is just keep this in mind, and also make sure that you're doing the right things to plan for this, because the worst thing that can happen is that the business doesn't plan for it and then it does come into effect, and you're then rushing around trying to get the information that you need. So I think something we can certainly talk to you about if you need any support with it. But yeah, something just to keep in mind from a legislative perspective. And then finally, watch this space. So a few things happening. So with the auto enrollment legislation, so workplace pensions, the mandatory nature of those being well over a decade old, the government are looking at ways to improve that system to bring more people into it, and also potentially, based on the rising cost of living and the increased state pension retirement age and how that plans to be moved out further, there's more onus on people to save for their retirement, to make sure they've got enough money to privately to be able to afford it and not just rely on the state pension. So there's already plans in place with no set date, but plans in place to lower the age of people who are auto-enrolled into pension schemes. So currently the eligibility criteria is that they must be age 22 and they must earn over £10,000 a year or be below state pension age. The government are looking to reduce that starting age down to 18, so to allow people to start saving earlier. A lot of young people do tend to opt in. From the statistics we see that people are wanting to contribute to their pension as soon as possible, but it just means that if the mandatory nature of it means that 18-year-olds must be enrolled, then that obviously opens pensions up to a much wider population. And again, I think in terms of the minimum pension contributions, there's very little from the government on this, but from pension groups and sort of national groups of brokers and pension providers, it's said that the 8% typical 8% total contribution probably isn't enough for most people now, especially younger people coming into the workforce who want to retire earlier than state pension. The 8% isn't going to get you enough money to be able to retire. So there is a watch this space on potential pension contributions rising in the future, but again, it's very much an industry piece rather than a government piece right now. But there are other areas in the world, Australia being one of them, where contributions are much higher than they are in the UK, and it's a model that the government are always looking at. And then finally, there's a lot of talk on the upcoming budget. However, everything that we're hearing now, especially from a tax and pension perspective, is very much hearsay. So I'm not going to comment on anything I'm hearing about, and I don't think anything should be taken as truth until the actual budget comes round. But there's always going to be people sort of speculating about tax changes, pension tax relief, the way pensions are treated. There's always lots of commentary around it. So I just always say, try and stay away from the gossip and just wait until there's an actually firm announcement on that. So although I've got it in my presentation, it's a very much watch this space, and what will come out it'll all come out in the wash. And then just a bit about what's next, really. We're in the UK, like I've already mentioned, workforces are coming increasingly more diversified, and from that point, a lot of especially the health care providers are seeing that it's not just about offering one holistic product anymore. It's about offering for different groups of people. So whether, you know, instead of having a medical insurance plan that suits all, why not have a medical insurance product which suits women's health or suits men's health? So it looks at things like menopause or prostate or whatever it might be, but in the right way. Also, you know, fertility is a subject that a lot of people, you know, have to go through as well. It's not simple for everyone. So, you know, having fertility benefits, there's several providers out there on the market now who do provide insurance and ability to lower the costs of fertility for people. So that becomes, you know, for some groups becomes a really important employee benefit. Neurodiversity is becoming a huge talking point as well now, and employers, you know, need to recognize neurodiverse groups as well, and more and more people looking to get diagnosis as well. So benefits available to help people get that treatment or their diagnosis and potential treatment a lot quicker as well. So there's certainly products on the market that are starting to look at the neurodiversity aspect of things. And then finally, gender dysphoria, there's a lot of, you know, it's a building piece as well. So again, benefits starting to look at how to support people in that space as well. So plenty coming down the track in terms of being more specific to certain groups of people. I think that's sort of been a trend of the presentation, actually, is just how can you look after people of all types in your workforce, because ultimately it is becoming more diverse. So that's the end of the presentation. I hope that's been useful to you. I know it's a very whistle-stop tour of employee benefits. That, I mean, if you do want to speak to me or Adrian about anything we spoke to, either you feel free to ask a question now, or ultimately you can always reach out to us via Claire or directly by the information that Claire will provide.
Thank you, Tom. That was really, really fascinating. And yeah, just I've made quite a few notes of bits and pieces that I perhaps wasn't aware of as well. So yeah, thank you so much for your time. I will circulate Tom's contact information out to everyone that attended later on. Does anyone have any questions that they would like to ask of Tom or Adrian? If you do, feel free to either unmute or stick your hand up or put it in the chat and we'll go through it. Or if you have to go because you're desperate for your lunch, then please go. Questions? No, well, I have just
from me. I need to jump off, Claire, but thank you very much, guys. I found it very interesting. So thanks very much.
Thanks,
no
Martin.
problem.
That's great.
Take care.
Thanks for your time. Take care.
Yeah. Thank you. Thank you so much, everyone, for attending. And I will circulate Tom's details out. Very knowledgeable, as you can see. So if you do want to explore any employee benefits or anything like that, please do reach out to Tom and Adrian, and they will be able to help you with any questions that you've got. And I'm sure that Adrian would be happy to look into financial well-being conversations with your team and that kind of thing if needs be. So give us all a shout. But thank you very much for joining us.
Thank you.
Thanks.